Hello, everyone, and welcome to today's event. We're delighted to be hosting an interview on an incredibly relevant and important topic, which is women's financial inclusion. The last few years, we've seen a huge shift in the way in which women are involved in the financial system, but a lot more still needs to be done. Around the world, over 2.7 billion women are still legally barred from having the same choice of jobs as men. In a 2018 study by the World Bank, which covered 189 economies, over 104 economies we found still have laws that prevent women from working in specific jobs. In almost 60 economies, we have no laws on sexual harassment in the workplace, and in 18 economies, husbands can legally prevent their wives from working. We are delighted today to be speaking to Mary Ellen Iskenderian, the President and Chief Executive Officer of Women's World Banking, to talk about women's financial inclusion across the world. Welcome, Mary Ellen.
Hi, Avantika. Good to be with you.
So, look, we've been thinking a lot about the people who are excluded, who are shut out of the formal financial system. So, can you tell us a bit about Women's World Banking and how it sort of fits into that context?
Yes, great. So Women's World Banking is a 40-year-old NGO. And from our very founding, our mission has been centered on providing access to financial products and services to low-income women in developing countries. And in our early days, a lot of that was really focused around microfinance. But as we have seen technology really overtake some of the more traditional methods of providing financial services to that last mile, to that segment, an explosion of partners has really emerged. So we have mainstream banks and cell phone companies, fast-moving consumer goods producers, fintechs, retailers, sort of anybody that's got a supply line into that low-income woman's life is really sort of game or fair game, given digital financial services, to providing her with those services. So it's a very fast-moving, fast-changing environment to be working in.
Right, and so, in a developing country, what are the challenges that a low-income woman faces in trying to get access to sort of financial services?
So, some of them are, just very, very basic things, such as, lack of an ID identification. I think, only 40% of women in the developing world actually have access to a digital ID. And as more products and services, government services, as well as private sector services go online, even if you had a paper ID, that's really not going to serve you. A total of 1 billion people around the world are locked out of that identification mechanism. So that's a huge priority, I think, for the development community as a whole, but it definitely falls disproportionately on women. You've got, sort of regulatory and sort of financial infrastructure issues. For example, the vast majority of credit bureaus around the world only represent maybe 5% of the population. They don't tend to consider smaller loans, or even if a woman has a perfect track record in microfinance and then she wants to grow her business by taking a larger loan, all of that previous history is gone. She's also got far less availability of collateral. Collateral is probably the number 1, 2, and 3 reason why a woman entrepreneur is going to have difficulty getting access to finance. And so finding alternative ways, either to use different forms of capital, so perhaps putting in movable collateral registries, or there's some really interesting fintech solutions that are coming up as sort of workarounds. And then you've got some institutional barriers too. Financial institutions don't think there's a business case to serving women. And that's a real part of our job, is proving that an investment in products and services that are particularly appealing to women, that meet women's needs, can be very, very profitable for them.
So could you explain this concept people talk about of gender lens investing, and also how does Women's World Banking invest with a gender lens?
Sure. So, as I mentioned, we're an NGO, but in 2012, we really decided to kind of put our money where our mouth was and to start to invest directly in financial institutions so that we would be that capital pushing them to continue to serve women, not only as clients, but also internally as leaders. So we raised a $50 million private equity fund that's been fully deployed. We're now actively making exits for that fund, and now have started raising a second, have had a $75 million second closing of the fund, and hoping to roughly double that with our final closing next year. And so, the concept of gender lens investing is, at least as I see it, is one where we're not so much just limited to companies that serve women or products that women use, but looking at really every aspect of your due diligence, of your risk mitigation strategy. We see a lot of really important research, particularly in the financial sector, that, banks that had more women in their leadership and governance during the global financial crisis came through the crisis better. There's just a better risk mitigation mechanisms in place when you have a more diverse leadership team. But at Women's World Banking, as I say, we're directly investing in those financial institutions, and we'll always, wherever possible, put a woman on the board. We will bring all of the other shareholders around the table to support gender diversity, both internally amongst the leadership and governance, but a greater outreach to women clients in the market.
So, I mean, in this world, what's the scope of the opportunity? How big is the opportunity here?
Well, you've got, you quoted some great statistics about, differential rates of employment and ability to access employment. There's still 1.7 billion people total with no access at all to financial services. About 1 billion of those are women. And if you think of probably closer to another billion who are dramatically underserved by financial services, the scope is really enormous. The women-owned businesses make up over a third of medium and small businesses around the world. They are opening at faster rates than male entrepreneurs, and yet they are disproportionately represented in those small businesses in need of finance. And the need is, in the trillions, I think it's $37 trillion of unmet financing need. So in the area that we're engaged in, providing financial services, the sky really is the limit in terms of investment opportunity to serve this underserved population.
And Mary Ellen, you can't have a conversation at the moment without mentioning the pandemic. There's been a lot of talk about this, and is it true? Do we have a sense of which the pandemic has had a really negative impact on gender inequality, on women disproportionately when it comes to economic matters, when it comes to social matters?
Yes, unfortunately, we've got quite a bit of evidence that the gender poverty gap has really been exacerbated by the pandemic. You've seen unemployment rates amongst women much more so than amongst men. You've seen women who already bear a disproportionate percentage of unpaid care activities, taking on even a greater percentage of those as there's more children at home and more care taking place at home. Very, very sadly, you've seen dramatic spikes in gender-based violence really throughout the world. And as we know, that's unfortunately an epidemic that affects everyone regardless of their socioeconomic status. So women have been quite hard hit. We're quite concerned that as more children are coming out of school, once again, you'll see more girls are anticipated to be left out of school and not to go back. I think one of the things that's certainly gotten my attention and many other development professionals is that while we're very concerned about more families going back into poverty, we're looking at that both in low income as well as middle income countries. So this is a real worry about a big step backwards that will have a much heavier effect, much heavier burden on women.
And how about access to finance? How is COVID-19 affecting women's access to finance, as well as challenges perhaps in this area we might have some opportunities?
Well, this is, I hope, one of the bright spots in that many governments have really revised their remote account opening procedures, their know your customer procedures, to allow literally millions of new accounts opened in order to facilitate government benefits payments. You've seen virtually every country in the world has either initiated or adapted a benefits payments, and many of them have been directed directly to women. And so they've needed, particularly if they're digital, they need an account to have those payments directly affected. So there is a real opportunity to now have millions of women come into the financial sector, have these payment flows coming into their accounts to keep them in the formal financial system as we hopefully come out of pandemic and into recovery.
And I understand that your second equity fund made its first investment recently.
Yeah.
Could you tell us a bit about the investment and, why now? Why in the midst of the pandemic?
Well, it's a great time to have capital to put to use because, financial institutions are looking for liquidity. The company that we invested in is a wonderful housing finance company in India that has a really unique model that I wish it were not so unique, but they require on any loan that they make for housing finance that the woman's name be put on the title to that property. And we know that asset ownership is such an important element in women's economic empowerment. And so you're not only providing that, that asset to the household, but making sure that the woman has title to it so that if she's an entrepreneur, for example, she might be able to use that as collateral. If there is an end to the marriage, she's going to have to be reckoned with as one of the owners of those joint assets. So it's a very empowering part of the business model. And we were excited to be one of the early investors in this company. And, they're doing very, very well. The old adage is, the housing finance companies tend to do very well in crises because people don't want to lose their homes. So we're hopeful that this shot of liquidity at this moment will keep this company, flourishing and part of a recovery.
Okay, perfect. Well, Marilyn, thank you so much for joining us today. And I hope you enjoyed the conversation.
Wonderful. Thanks so much. It was great talking with you.